Crypto is collapsing again, not drifting lower, but free falling, and one company is suffering more than anyone else: MicroStrategy. The world's most aggressive corporate Bitcoin holder is finally facing the dark side of its high-risk strategy. For years, MicroStrategy transformed itself from a software company into a leveraged Bitcoin vehicle. Michael Saylor borrowed billions, issued debt, and used every available dollar to accumulate a massive Bitcoin position. This works beautifully when crypto is exploding upward. But in moments like this, when Bitcoin is falling fast, that same strategy becomes a financial disaster. Bitcoin has lost a huge portion of its value in a short period of time. Liquidity is evaporating, institutions are stepping back, and retail interest is vanishing. Every negative headline accelerates the fear. And with every drop in Bitcoin's price, MicroStrategy's stock collapses even harder. The math is simple. The company is so leveraged that a 10% fall in Bitcoin can trigger a 20%, 30%, even 40% fall in MSTR. MicroStrategy isn't just exposed to Bitcoin. It is entirely dependent on Bitcoin. When BTC drops below the company's average purchase price, the balance sheet weakens instantly. Investors panic, short sellers attack. Lenders start re-evaluating risk. The feedback loop intensifies until the stock becomes a leveraged reflection of crypto's worst days. There's another problem almost no one wants to admit. Crypto markets are thin. They're not deep like traditional equity markets. Large sellers can move prices significantly. Rising interest rates, new regulations, and declining trading volumes have created a liquidity trap. Bitcoin no longer has a steady inflow of new buyers. This puts MicroStrategy in an impossible position. It cannot sell its Bitcoin without triggering even more panic. If Saylor ever unloads part of the holdings to save the company, the selling pressure alone could send BTC into an even steeper crash. That would destroy MicroStrategy's balance sheet completely. The company is trapped by the very asset it worships. Investors on Wall Street are finally seeing the danger. The market is beginning to realize that MicroStrategy isn't a software firm anymore. It's not a tech innovator. It's a highly leveraged Bitcoin holding structure pretending to be a corporation. When Bitcoin rises, MSTR explodes upward. But when Bitcoin falls, the collapse is far worse and far faster. This meltdown doesn't guarantee the end of MicroStrategy, but it exposes how fragile the company really is. As long as Bitcoin remains above key debt collateral thresholds, MicroStrategy can survive. But all it takes is one deeper leg down, or one liquidity shock, for the company to enter a true crisis. This is the danger of building a corporate empire on top of the most volatile asset of the modern era. When things go up, it feels like genius. When things go down, leverage becomes a guillotine. Crypto is in free fall. MicroStrategy is collapsing even faster. And unless Bitcoin finds stability soon, one of the biggest symbols of the crypto revolution might become one of its biggest casualties. If you found this analysis helpful, subscribe, and turn on notifications for more no-fluff financial vlog breakdowns of markets, money, and risk.